You've probably heard the FTSE 100 mentioned on the news, but what is it, and why does it matter? It's a term that pops up in headlines and conversations about the economy, but for many, it remains a bit of a mystery. The FTSE 100, or FTSE, is a list of the UK's 100 biggest companies, ranked by their stock market value. These are the giants of British business, shaping not just the financial markets, but also the everyday lives of millions. Think of the big banks, supermarkets, and energy companies you see every day. They're all on there. From the places you shop to the companies that keep your lights on, the FTSE is a roll call of familiar names. The FTSE is like a health check for the UK economy. When these companies do well, the FTSE goes up. When they struggle, it drops. It's a real-time indicator of business confidence and economic strength. It's a quick snapshot of how the country's largest businesses are faring, and by extension, how the economy as a whole is performing. But it's more than just a number. The FTSE's performance affects job security, pensions, and even the value of your savings. When the FTSE is strong, it can mean more stability for families and individuals across the UK. When these companies thrive, they hire more people and invest in new projects, boosting the economy. This growth can lead to new opportunities, better wages, and increased prosperity for communities. If they struggle, it can mean job cuts and less investment. The effects ripple out, touching everything from local businesses to public services. Even if you've never bought a share, the FTSE's ups and downs impact your daily life. Prices, employment, and even the cost of living can be influenced by its movements. Understanding the FTSE is like learning the basics of a new language, the language of money and the economy. It helps you make sense of the financial world and the news that affects your future. It's not about becoming a trader overnight, but about understanding the forces shaping your finances. With a little knowledge, you can make more informed decisions for yourself and your family. Next time you hear the FTSE mentioned, you'll know it's telling a story about the world around you, a story that's unfolding every day. And that's a powerful thing to understand, giving you a clearer view of how the economy connects to your own life. Picture this. Monday morning, the City of London stirs to life. As the sun rises over the skyline, at exactly 8 a.m., the stock market bursts into action, setting the pace for the day ahead. The FTSE 100 begins to climb, what market experts call a bullish start, a sign that confidence is high and optimism is in the air. Investors are eager, snapping up shares as they anticipate positive news on inflation, employment, and the broader economy. It's like hearing a rumor about a massive sale and rushing in before prices go up. Everyone wants to get in early. As the morning unfolds, share prices of banks and mining companies steadily inch upwards, reflecting the market's growing confidence. A strong economy means more loans for banks, higher demand for resources for miners, and more opportunities for growth across the board. Every bit of news, every rumor, every whisper in the financial world feeds into this giant, ever-turning machine. The collective mood of thousands of investors, each with their own hopes and fears, pushes the market up or down, sometimes in dramatic fashion. On this particular Monday, the mood is unmistakably positive, setting an upbeat tone for the entire week ahead. For FTSE companies, their value on paper increases, making them more attractive to both local and international investors. For investors, their holdings are suddenly worth more than they were on Friday, bringing a sense of satisfaction and excitement. The market is always moving, always reacting to the world in real time, responding to headlines, data releases, and even global events. It's not a dusty institution, it's alive, dynamic, and every single day brings a brand new story to the trading floor. That Monday surge? It's just one example of how quickly fortunes can change, and how the market can surprise even the experts. And it's exactly why so many people, from seasoned professionals to everyday savers, keep a close eye on the FTSE. Because in the world of finance, every morning brings new possibilities. When finance experts talk about key data, they're referring to the vital signs of the economy, the numbers that tell us how healthy or sick the system really is. These figures are like a regular checkup for the financial world, helping everyone from investors to policymakers understand what's going on beneath the surface. The big three pieces of key data: inflation, employment, and GDP. These are the main indicators that get the most attention, and for good reason. Inflation measures how fast prices are rising across the board, from groceries to gas. If it's high, your money buys less, and everyday life gets more expensive for everyone. Investors watch inflation closely because it affects interest rates, company profits, and even the value of your savings. Central banks may raise rates to fight inflation, which can ripple through the entire economy. Employment figures show how many people are working, how fast wages are growing, and whether businesses are hiring or firing. These numbers reveal the strength of the job market. Low unemployment and rising wages mean people have more money to spend. Good news for businesses, retailers, and the overall economy. But if wages rise too fast, it can push inflation up, so it's a balancing act for policymakers and companies alike. GDP, gross domestic product, is the total value of everything produced in the country, from cars to coffee shops. It's the broadest measure of economic activity. If GDP is growing, the economy is expanding and creating opportunities. If it shrinks for 2 quarters in a row, that's officially called a recession, a warning sign for everyone. Investors use these numbers to gauge the economy's health, spot trends, and predict where the markets might move next. A positive inflation report, strong job numbers, or rising GDP can send the market soaring, boosting confidence and investment. But bad news, like weak job growth or high inflation, can do the opposite, making investors nervous and markets fall. These 3 data points are the headlines everyone watches, from Wall Street to Main Street. They're not secret codes, they're the clues to what's really happening in the economy, and they help us make sense of the bigger picture. That's why these numbers can make the market jump for joy or dive for cover, because they reveal the story behind the headlines. Even when the FTSE is up, not every company is celebrating. Take SkinBioTherapeutics, a small company focused on skin health. On a day when the big players were rising, SkinBio's shares crashed. Why? The company announced disappointing results from a key clinical trial. For a life sciences company, trial results are everything. A positive outcome can send shares soaring. A negative one can devastate investor confidence. Investors rushed to sell, and the price plummeted. Classic supply and demand. SkinBio's story is a reminder. The fate of any single company depends on its own news, not just the wider market. The FTSE gives the big picture, but individual companies live and die by their own results. That's the risk and the reality of investing. The stock market isn't just for the rich, it affects almost everyone. If you have a workplace pension or a stocks and shares ISA, you're already an investor. Pension funds invest in big, stable companies, many in the FTSE 100. When the FTSE rises, so does the value of your pension pot. When it falls, your savings can take a hit. That's why financial advisors stress long-term investing. Over decades, the market's ups and downs usually trend upward. More people are using ISAs to grow savings for big goals, like a house deposit. A strong FTSE is good news for millions of savers. The market isn't abstract. It's a tool for building your financial future. Want to start paying attention to the market? Start small. Check business news headlines from trusted sources like the BBC or Financial Times. Use free finance apps to track the FTSE and see how companies you know are performing. Don't worry about the jargon. Just get in the habit of checking in daily. Look up brands you use every day and see if they're publicly listed. Following familiar companies makes the market more relatable. The goal isn't expertise overnight, but building confidence and knowledge step by step. Demystify the market by connecting it to your own life. Many of us see money as something to earn and save, but rarely as something that can work for us. Investing isn't about reckless risk, it's a mindset shift. Inflation erodes the value of cash over time, so investing helps your money grow faster than inflation. For young people, time is your greatest asset. Thanks to compounding, even small investments can grow big. But it's never too late to start learning. Understanding markets helps you make better decisions about pensions and savings. It's about empowerment, taking an active role in your financial life. Ask questions, seek information, and build confidence. Shifting from saver to investor is a powerful step toward financial security. Start thinking of your money as a tool for your future. The stock market teaches patience in a world of instant gratification. Quick riches are rare. Steady growth rewards those who stick to a plan. Trying to time the market is nearly impossible, even for professionals. The real strategy is time in the market, staying invested through ups and downs. When markets fall, the urge to sell is strong, but history shows markets recover. Selling in a panic locks in losses. Patience often pays off. Diversification. Spreading your money across different companies reduces risk. Watching the market teaches you about the world, technology, trade, trends, and politics. It's not just about money, it's about understanding how everything connects. The patience you learn applies to life beyond investing. Stay curious, keep learning, and remember, investing is a long game. That's the real lesson the market offers. The FTSE 100 isn't just a number, it's a story about our economy and your money. That Monday surge and SkinBio's dip are just chapters in a bigger narrative. This world is connected to all of us, through pensions, savings, and our future. You don't have to be an expert. Just start by reading headlines or looking up a company you know. Every small step builds your knowledge and confidence. The goal is to become an active, informed participant in your financial life. Learning about money and investing is one of the best investments you can make in yourself. Don't let jargon or fear hold you back. The information is out there. Your financial journey can start today. Stay curious, stay informed, and keep learning. If this helped you think differently about money, subscribe for more practical finance lessons.